cooking is going to save you some cash. We want to save you even more. Bruce Sellery is here with what financial product not to buy. Oh, Bruce. It is so good to see you.
It's great to see you.
So I say financial products.
Yeah.
Let's explain what exactly we are talking about
Well,
here.
we know about high-calorie foods. We're going to talk about high-calorie financial products. The first, which people are aware of, is a payday loan. So it's a short-term loan. You pay it off on your payday. There can be penalties, but also really high rates. There's rent-to-own financing, where you get the item and you pay it off over time. But in the end, you can pay a lot more for the item than you would if you had the cash up front.
That's right.
There's also the pawn shop. And, you see these in lots of neighborhoods where people take in a ring or an iPad or something and use that as collateral. The last one is check cashing. So people who don't have a bank account or need the money right away and can't afford to have some of it withheld by the bank may choose that service. So there's lots of different ones out there, and the costs can be really high.
Okay, how high are we talking about here?
Here's an example, really, really high. So say you need $300 for 14 days.
Yeah.
A payday loan is at the high end, but here's for comparison. Let's say you had a great credit rating and you could borrow on a line of credit. $6, 7%. Say you had a reasonable credit rating and you took a cash advance on your credit card, $7.50, 21%. If you had to go to a payday loan, it could be $63, which is more than 500%. 500%. I mean, it's like an eye-popping number, but it doesn't seem like that much because it's, it's like 14 days, whatever. Pawn loan, 60%. Rent-to-own, maybe it's 80%. So the numbers are really, really high. And there also can be penalties. If you don't pay off a payday loan, for example, you can get caught in this vicious cycle. They can send your debt to a collection agency. They may call your employer, your friends, family. There's a whole bunch of other troubles.
And family.
Associated with it.
That's humiliating. Like, Tracy hasn't paid off this debt. It's like, could you not tell my cousins that, please?
Am I 14 again?
What's going on here? Yeah, and you know what? I remember when I was severely in debt, in university, you come to campus and there's all those credit card companies. I was like, I want one.
How do I get one of those?
Yeah, I got one. Credit limit $500. Spent it, I don't know, on like velvet tank tops to go to the club.
Which you still have to this day.
Of course, they still
you
fit.
wear on the show.
Never paid a dime of it. Ruined my credit. But when those collection agencies were calling, they were brutal. Like, they were mean. It's like there's no rules or regulations for the things they can say to you. It's awful. So you don't want to be in that situation.
You do not. Now, I want to acknowledge that there are some real circumstances that people are dealing with. In your case, you were a young student, and some people, it's this frivolity. You were being silly. Some people are genuinely living to paycheck. They have no slack. Some people are dealing with a life crisis, a job loss, a divorce, an addiction.
Health problem.
Yeah, some people have a poor credit score for whatever reason, so they don't qualify for a line of credit. They can't get a credit card. And some people are what they call underbanked. So maybe they don't speak the language of the bank. Maybe they're new to the country, whatever. And then there are people who are simply unaware of the consequences. Like, it's no big deal. It's like, it's 21 bucks for $100. It's whatever it is. They aren't aware that the rates are really, really, really high. And so a part of our job right now is to make them aware. You're now aware.
Now you know. But the thing is, if you need that money, if you need that baby formula, if you need that rent, what are you supposed to do? A lot of these organizations make sure that they are available and accessible in neighborhoods where they know there's going to be people who are going to access this. So what do you do as an alternative?
So the alternatives are really tough, and I'll talk about a couple, but I just want to give some context on why the costs are so high. The lenders are taking a risk. So if you think about life insurance for someone who's been a smoker for 20 years, you're going to pay more for life insurance because you're taking a risk. So people in these circumstances are a higher risk for the lender. The second thing is it's the cost that the market will bear. As you say, it's baby formula, right? So if you're in the desert and someone is selling water and it's 20 bucks, you're like, I'll take two. Whereas who pays 20 bucks for a bottle of water when they're available at every convenience store on the corner? In terms of alternatives, there are a couple things to look at. First are credit unions or banks that have products that are actually focused on this kind of fast and short-term loan. And they are there. They're not ubiquitous, but they are there. Second is to look and see could you get a cash advance from your credit card? Could you get a pay advance from your employer? Or could you get a loan from family? So there are other things out there. And then the third thing I would say is if you're dealing with debts and you cannot make ends meet, it may be time to pick up the phone and call a nonprofit credit counselor. So you have to go online and find one where you live, but they can provide some coaching, some resources to help you get out of this cycle, because this is what happens, is get worse and worse and worse and worse, and suddenly you look and the payday loan you're taking is completely your entire paycheck. You can't even pay your rent anymore.
So that payday loan that you took, or that financial product that you bought, that 550% interest rate, that's not a default thing. That's just the regular rate for taking that money.
Yeah. Now, I should say that the way these loans are regulated depends entirely on where you live. So there are some interest rate caps, there can be advertising restrictions, all those kinds of things. And I think if you think about it from the lender's perspective, there's two perspectives. On the one hand, they help borrowers sometimes avoid even worse consequences.
That's true.
So they're not going to default on their home. They're going to be able to keep the hydro on. Sometimes they provide a service people couldn't access it in a regular way. So they should be compensated for that. On the other hand, I get really concerned about targeting vulnerable people, right? So a disability check as proof of income. Well, if they're receiving a disability check, this is already problematic. The second thing, though, is that it can enable bad behavior. And this is no judgment on the people who are in these circumstances. It's just for some people, it's like, I need to declare bankruptcy, or we need to sell the house, or we need to do something that alters the situation systemically, because I'm just getting a blood transfusion. I have severed my arm. It is bleeding into the street, and in the other end, they're giving me a blood transfusion. It doesn't necessarily help. So it is, I don't want to get moral about it. I just want people to know, hello, this is what's happening, and how can we address some of the underlying reasons and get people back on track.
For sure. We don't get moral about money around here.
No, I don't
You're
get
very
moral
good and
on
open-minded about, you know, people doing what's best for them to do for their families, but it's also good to know. It's about the awareness, and thank you very much for the education.
My pleasure.